I want to get your take on those Jamie Dimon comments. First, he's saying that he sees, 35% chance of a recession. Most people, at least earlier this year, were seeing a soft landing. Earlier this year, people were seeing like 75, 80% chance. So he's a little bit less optimistic. At the same time, I want to get your take on the market risk of initial jobless claims coming out later today. Bloomberg article looking at the possible swing that could come after that. A lot of people think that a higher number could re-spark those recession fears. I want to get your take on both of those.
So listen, I think everything can be summed up with this, including the drama that happened on Monday. So listen, on average, the market has 5% pullbacks and 1% 10 correction each year. So far this year, we've only had 5% pullback. So I expect volatility to continue, and we're definitely seeing, of course, and I know we're going to get to my Rex word of the day, kind of like the reasons why Monday happened. So that's just the backdrop of the reasons. But I really expect going forward that we are going to see some more volatility.
All right. What is your Rex word of the day? How do you see today shaping up?
So my Wex word of the day is double whammy, right? And so it was a double whammy that caused the market tailspin on Monday. And I know we've been talking about this kind of all week and for part of the show, but for investors that are still trying to kind of make sense of what happened on Monday, it was a double whammy. So first, the Bank of Japan raises rates, right? So they did that on July 31st. This really strengthened the yen against the dollar. So investors who had borrowed in the yen, right, this carry trade, to invest in these higher yielding assets had to quickly unwind their positions. That unwinding led to the selling pressure across assets globally. And then the second thing, of course, was last Friday's job report. Of course, it was weaker than expected. And of course, that's really raising the concerns. Jamie's talking about these recession whispers. And so that's really what happened on Monday. And it's important to understand that, Frank, because then you can kind of plan for what's going to happen.
Okay. So we understand that's what happened on Monday, Tiffany, but what about today? Initial jobless claims coming up. We just showed the estimates a short time ago. The estimate for this week, it's 240K. If it comes in over that, are you concerned about volatility in the markets and maybe those recession fears peeking their head up once again?
Potentially, right? And so right now we're in August. We have until September until the Fed potentially raises rates. And so I think that economic data coming out, including today, is really going to affect that, right? So we're going to see that volatility. People are talking about the election and all the things going on in the world. I think the single most important thing that's going to really drive the markets is whether the Fed is going to cut rates in September, and any little piece of data that indicates that it might or it might not is really going to move the markets.
All right. I think as of today, at least, the consensus is they are going to cut coming up in September. Some people think it may even be a 50 basis point cut. With that in mind, I just want to ask you about your pick for us today. So your pick is the XLP, the Consumer Staples Select Sector ETF. Why go defensive? Why go defensive right now with the idea that we're going to get rate cuts? And in fact, the economy is pretty strong. If you look at the Atlanta Fed GDP now, that's coming in at, I think, at 2.9%. The last read at 2.8%. Why go defensive?
So I think, I was on your show 2 weeks ago, and that could not have been a better setup for this week. So asset allocation, I talk about it all the time in the show, Frank, is so important. And so if you are positioned, if you have a diversified portfolio, if you have your asset allocation strategy set, you kind of did better on Monday, right? And so we think about what did well on Monday. Bonds did better on Monday. Defensives did better on Monday. And I think it's very exciting to get caught up in, these large cap growth stocks, right, that really kind of that have been driving the performance of the market for so long. But it's really important to have a balanced portfolio. So defensives, if you don't have any, it's something you guys that investors should consider. And so XLP is my pick. It's a really good way to kind of get broad exposure to the defensive sector. Okay. It's a consumer staples sector SPDR ETF.
One very quick last question, Tiffany. We're going to show a board of the valuations of the Mag 7. They've declined quite significantly over the last month. Are you looking to nibble or maybe even take a big bite out of that after we've seen those big dips?
Frank, I'm always a fan of tech and growth stocks. And so, if you don't own these individually and you have conviction around some of these, of course, buying on the dip, buying things when they're on sale is always a good idea. So maybe an opportunity to kind of add to some existing positions.